good morning, good afternoon, and good evening, friends. In today's class, we'll look into the another method of depreciation, which is called annuity method. What is the annuity method and where it is commonly used? We'll get into some briefing about annuity method and how the depreciation is calculated. Then we'll go ahead and then solve a problem on it. Okay. So annuity method of depreciation, it actually takes into account a couple of points. One is money invested in acquiring asset. There is a cost involved, right? So there is an interest involved. So what it assumes is, if money is not invested in the asset, it could have got used for getting additional income, interest, right? Interest. So annuity method assumes like that interest unearned should be included as part of the asset cost and depreciated annually. That's what it assumes, like interest unearned. Like if this money is invested elsewhere, that could have been an additional interest income or any other income. So it assumes that this interest foregone, because it is getting invested in this particular asset, should also be included as part of the asset cost while calculating depreciation. And this annuity rate can be ascertained from the annuity tables, right? For this percentage of interest, this rate of for this percentage of interest, a number of years, and what is going to be the present value of future, right? So that it assumes that that is the total interest. Then we have to calculate, right? So why it is being done like this? Why it is being, because the amount along with the interest will be available for replacing the asset, because over a period of time, after 4 years or 5 years, suppose we are getting an asset for 1 lakh this year, right? Assume that assume asset cost is 1 lakh now, right? And the useful life is 5 years. So in conventional method, we will be depreciating this 1 lakh over the life of the asset plus minus residual value of the life of the asset, right? After 5 years, this accumulated depreciation, can be used for replacing the asset. But what we fail to notice is 1 lakh current year will not be the same 1 lakh after 5 years due to the inflations and the increase in cost, etc. Like so, 1 lakh now is not the same after 5 years, right? Due to inflation and cost increase and value depreciation and etc. Right? So due to this factor, a machine which is purchased for 1 lakh might not be available for 1 lakh after when we have to replace that machine after 5 years. So this is the reason in annuity method, interest component is also added, right? So that when the asset is available, it is available along with the interest, and along with the interest only it is depreciated. So the money what is available will be different than in the conventional method. However, this method is not used in most of the scenarios. For one reason being, it is very complex, and calculation of asset value has to be done every year, right? So involving huge efforts. So this is in practice, or rather, or practical for leasehold assets. Leasehold assets, right? Which is very long term, and then this is where actually you require a considerable capital outlay, right? Uh, um, where we have considerable capital outlay, and not for the normal plant and machinery, equipments, etc., etc. This is not being used. Where there's a considerable capital outlay, this method is being used. Now, what are the relevant journal entries that we'll be processing? Right. The first one is, as usual, the depreciation account. Okay. First is we have to calculate the interest, right? So interest asset account debit. Because this interest is added to the asset value, we have to debit asset, and asset account debit to interest account credit. Because this is supposed to be an unearned income, right? So that is the reason it is credited. Interest account credit. Then second entry will be the normal depreciation account. Let me put it here. One space, right? Depreciation account debit to asset account or provision for depreciation account credit, right? This is how it is. And then the third entry is transferring of depreciation to P&L. So P&L account debit to depreciation account credit, right? Then we have to process the fourth entry. What is the fourth entry? Is transferring the income to P&L account as well, right? Interest to P&L account. So the fourth entry will be interest account debit to P&L account credit. So this entries has to be processed. All the four entries has to be processed while the depreciation is calculated in the annuity method. Now, fourth entry is for transferring the interest to P&L. Right, now let's put into illustration 4. So illustration 4, what does it say? A lease is purchased on 1st April 2012 for 4 years at a cost of rupees 2 lakhs. It is proposed to depreciate the lease by annuity method, charging 5% interest. A reference to the annuity table shows that to depreciate rupees 1 by annuity method for 4 years, charging 5% interest, one must write off a sum of rupees 0.282012. That is to write off 2 lakhs. We have to multiply 2 lakhs into 0.282012, and that is 56 rupees. 56,402.40 has to be written off every year. Prepare the ledger account for depreciation and see how we are transferring it to the P&L. I'm just copying the ledger format. Yeah, copying the ledger format and depreciation account format. So this is an case of lease account. For the purpose, let me say it as year 1, year 2, year 3, year 4, right? Year 1. Right? So first, to bank is 2 lakhs. This cost of the asset. And we know that what is the depreciation to be done every year? It is 56,402.40. Then we have to calculate what is going to be the interest. Interest at the rate of 5% on 2 lakhs, which is equal to 10,000. So the balance in the asset account, at the end of the year will be is equal to 2,10,000 minus 56,402.40. Now we are left with beginning balance of year 2. Let's take year 2. Beginning balance is 1,53,597.60, and then we have to calculate interest at the rate of 5% on 153,597.60. Yes, the end balance we have to calculate interest, right? So the depreciation again will be 56,402.40 and what's going to be the interest is equal to this into 5%, which is 7,679.88. So what is going to be the end balance balance in the asset account is going to be is equal to 161,277.48 minus 56,402.40. The net balance for year 3 beginning balance is 1,04,875.08, and the interest is going to be 5,243.754. Depreciation remains same, 56,402.40. End balance is going to be students would be following, right? So balance is going to be is equal to 1,10,118.83 is equal to 1,10,108.83 minus 56,402.40. Now that leaves an end balance of 53,716. Just copying this to one more year. Copying this to one more year. Year 4. Year 4 balance is equal to 53,716.43, and interest is going to be 2,685. Depreciation is going to be 56,402. So the balance matches 56,402.40. That's the end balance, right? Students, we are following this, right? The interest is calculated every year on the beginning balance or the end beginning balance of the year, and then on top of it we are depreciating 56,000, which is an annuity value added to the asset cost that is being included as part of the depreciation, right? Now if we put in the depreciation account, what will happen is I'm just adding depreciation as one liner here. Depreciation year 1 and year 2, year 3, year 4. Depreciation is equal to 56,402.40. 56,402.40. That is the depreciation that's charged every year, and the P&L account balance again remains same. P&L account P&L remains same, right? Let's copy this. Year 1, year 2, year 3, year 4, and P&L account does remain same. P&L account year 1, year 2, year 3, year 4. So depreciation remains same throughout the year. This is how it's transferred. Now at the end of the year, at the end of the period, the total amount that is there as accumulated depreciation or asset including interest will be 2,25,609.60. That is the amount that will be available after the end of the asset for replenishment, right? So the interest component also gets added to this, and that makes the replacement of the machinery at the revised cost more easier, right? So hope you follow this, and then any doubts or clarifications, you please write an email to me at babupriya@rediffmail.com, and I'll come back to you sooner. Or you can also post your comments onto this video, and I'll get back to you soon. Thank you, friends, and have a great day.